Let's put this into perspective with Mohit Gang, co-founder and CEO of Moneyfront, who joins us in the show this morning. Mohit, good morning. Thank you so much for your time. Just help us understand the mood of the market. Yesterday, we saw this massive rally in the second half of trade, but this morning, some signs of profit booking. Is that what you're seeing?
Hi, Kartik. Morning. Always a pleasure to be on your show. Look, I think I don't yet see the mood totally chirpy, bubbly, or whatever, enthusiastic about the market prospects, right? And there are multiple reasons. Obviously, you were extremely weak on the RSI charts yesterday, and there was an expected bounce back which came because there wasn't a very dampening bad news over the weekend, right? And this kind of gave a little bit of a fillip, but to my mind I think the underlying current of the market still remains negative, Kartik. Honestly, you need a resolution of the crisis ASAP. You need either party to concede something, either party to call out and say that okay, this is over now, we are settling for whatever ABC XYZ, right? And unless that happens, and unless the strait opens up formidably, nothing can actually cheer up the market. You need the hormuz strait to open up, and there is no second guessing that some containers passing through some countries being allowed, some not being allowed, till such time that there is a danger on transit. I don't think so insurers are coming forward and insuring the vessels which are passing through. I don't think so that vessels are freely moving through. And if that doesn't happen pretty soon, Kartik, I think there the second order, the third order impact of this on the economy can be actually very, very brutal, and which is why market is the way it is.
Okay, so that obviously makes sense that there is clarity awaited and there is absolute clear decision making required on the Strait of Hormuz. Meanwhile, you were, of course, referring to that critical Strait of Hormuz, and look at the price chart of Brent crude oil and how day after day it has been inching up. Now, obviously, there are concerns, but the fact that there are certain Indian carriers which have been allowed to pass through the Strait of Hormuz should have at least on the Indian stock markets reflected a little better off. But it seems that investors seem to be worried, Mohit, whether this is going to be a lasting solution or not to the war.
Oh, definitely, Karthik. Look, I think symbolically, optically, it's a great thing. It's a great thing. I think it's a great point scored for India diplomatically on the global arena. And for not a single minute am I undermining the achievement. I think it's a formidable feat. But you look at the two vessels coming through, right? The total quantity of LPG which came was around 92,700 tons. Now, that just doesn't suffice for even 1.5 days of household consumption of India, right? So you need that kind of those kind of vessels to come every day. It's not just one single or two single vessels coming through. You need that kind of supply every day. I'll just give you a very small example, Karthik, and which is what I'm referring to. The third order or the second order impact of this. India imports 100% of its helium gas.
Right.
Entire import comes through Qatar and the Strait of Hormuz. There is some import which comes from Russia and US, but predominantly the almost like 95% plus helium comes from Qatar. Now, helium is used in multiple things. The biggest usage of helium is in MRI scanners, right? And we don't have enough supply, we don't have enough storage of helium. If that doesn't come through, you will have those MRI scanners, those computing machines, and a lot of those industrial processes coming to a standstill, and we don't even know the overall impact of how this will lead to multiple things in the economy. And that's just one example I've taken, helium, because no one's talking about it. You have people speaking about sulfur, you have people speaking about aluminium, multiple other fertilizers which will impact the farm sector. So all I'm saying is the impact is much more formidable than what you and I can make out perhaps sitting on the screen. And if it doesn't come to a resolution by this month and Karthik, then we are looking at a very, very a long haul for the economy to come back.
Point you raised, because the second order and the third order impact right now, at least in conversations dominating headlines, is restricted to inflation and perhaps a slowdown of the growth charts. But beyond that, medical use obviously becomes a very strong point to note. And thanks for bringing that up, Mohit. Meanwhile, I want to look at the kind of wealth erosion which this war has caused and seek your input on how investors should navigate these turbulent times. If you look at the Nifty 50, it is down about 7% on yesterday's close ever since the war began on the 28th of February. The Nifty oil and gas is down in more measure at about 7.6%. Meanwhile, domestic sectors like Nifty auto is down about 12.6%. Hard to explain. Plus, Nifty bank also down about 10%. perhaps owing to the FII exodus that we are seeing. Nifty IT performing relatively better, down just about 5.1%, so better off than what we've seen on the benchmark Nifty 50. But the small cap and the mid cap space is what I want to focus on, and I'm pretty much taking cue from your midnight post on Twitter, Mohit, which really talks about the turbulent times and the small cap advantage visible. In your post, you mentioned that the Nifty small cap 250 PE, which is trading at about multiples of 24x, is actually better off than what we've seen the 7-year median PE at about 30x or so. Is this really a buying opportunity? What exactly is the message that you want to give investors?
Oh, absolutely, Karthik. Look, you have to have the gut and the gumption to go in the market at this point in time. Not many will do it, and not many should do it also, unless you have the appetite to swallow the volatility, right? Though I've mentioned it's the P currently is at 24 times, but we have seen a P of as low as around 17 times also around 2022 or 23. I've mentioned the date in my tweet. I don't recall it. Around August 23, I think, if I'm
Yeah,
not
you're
wrong. Or
mentioning
sorry,
2018, end 2018 and mid 2022 when the small cap corrections were visible last.
absolutely. 22, I think August, October was
Yeah.
around the time when the small cap correction was brutal. And for a longish period of around 6 to 7 odd months, the small cap P multiple was trading in the range of around 17 to 20 odd times, right? So it was like 6, 7 odd month kind of a period. And the 20 to 24 kind of a range was also a pretty longish range. It traded in that range for a pretty long while, but the bounce back from there on, and we all know the story of 23 and 24 was ferocious, right? So if you have, as I said, if you have the risk appetite, if you have the time horizon with you, I'm not anyone to call out the market. It's not my business to be. But look, once all this settles, and it will for sure settle, whether a month or a quarter, I don't know. But once it settles, and when market starts looking forward, I think small cap is the one, or mid caps are the one who will cheer up the market. I've changed my view. Actually, I was pretty negative on small cap at the start of the year,
Yeah.
but over a period of time, seeing the correction, I think I'm now getting a little bullish about both mid caps and small caps for people who have the risk appetite and who have the patience to stay put in the market for at least 3 to 5 years. I think it will reward them very handsomely from these
Right,
levels.
and you were also mentioning in your tweet, if I remember correctly, Mohit, that if you can stomach the punch of about 20% more downside, then lump sum may be a good idea. Otherwise, just stick to your SIPs, and SIPs in small caps and mid caps. At least from what I understood from your tweet, is something which is likely to give you better dividends in the 3 to 5 year horizon. Is that right?
Oh, absolutely. Look, Karthik, I think most of these kind of events, my understanding says, ends with a supernova effect. What I mean to say is they always end with a catastrophic capitulation, right? We haven't seen that kind of a day. We saw that last Friday when the markets were like bleeding chips all across. But you need that one extremely bad day when your soul says, "Oh, boss, this is like the correction what I've seen," and you're like extremely fearful at that time. And that perhaps is the point of where the tide turns, right? So maybe you have one of those days left in the market. If not, then yes, well and good. But if you have those days left, then perhaps lump sum might not be a great idea unless you have the heart and the stomach to digest good 10-20% correction more from these levels. Otherwise, just stagger it out for 3 months, Karthik. I think I'm not asking for a longish period here. 3 to 6 months should be good enough for one to enter. If you enter in these times with that 3 to 6 month window, I think there is enough and more money on the plate.
And is it still a good idea, Mohit, even if you're looking at the small cap and the mid cap space, is it a good idea to just take the mutual funds route where your exposure is a little more diversified as opposed to going absolutely selective on certain stocks?
Oh, yes, Karthik. I think that I've always believed in. Unless you are the one sitting in front of the screen and analyzing the stocks day in and day out, and you know what to buy and what not to buy, I think mutual fund gives you a very formidable route to enter the space holistically, right? With expertise, with professional management, with ease of entry, exit, both. And even in mutual funds, if let's say you don't want to break your head, you just go with the index and buy the index out there. So there are very simplistic ways available for investors who are confused at these levels what to buy, how to buy, and when to buy. Go into a simplistic mutual fund with an SIP route of 3 to 6 months, and that's as easy as it gets.
All right, Mohit, do stay with me. There's another corporate news item that popped up yesterday, which I want to run our viewers through because Reliance Industries has signed a binding long-term agreement with South Korea Samsung C&T to supply green ammonia over a 15-year period starting in the second half of FY 2029. The deal, valued at over $3 billion, is among the world's largest long-term green ammonia offtake agreements. The partnership is expected to strengthen India's position as a major exporter of green fuels produced through a fully integrated domestic value chain. Reliance Industries is building a large new energy platform spanning renewable power, energy storage, green hydrogen, and downstream green fuels. The project also aligns with India's national green hydrogen mission and the broader push to boost clean energy manufacturing under the Make in India initiative. Investors are reacting positively to that news in trade this morning. Mohit, we see Reliance Industries is up about 0.4% or so in trade this morning. Obviously, a timely decision, obviously in the making for a much longer time, but the announcement of green ammonia really making use of the sunlight, which India, like pretty much, all of the world has abundance of, at a time when energy supplies seem constrained. So what do you make of this latest move by Reliance Industries? What does it mean for investors who are looking at India's energy story?
Look, I think, Kartik, there is no two doubts about that. One thing which India has abundantly available and which we haven't been able to successfully utilize is the energy around us, is the green energy, the solar energy, which we have amply available, right? And I think it's high time that India does something to be self-sufficient and self-reliant on the energy front. We've seen what a small crisis can lead us to, right? We're running out of LPG, we're running out of CNG, and these things can be can have massive impact on the economy and daily livelihoods of people. So not it's not an easy thing. So my sense is, I think Reliance is pushing all the right buttons out here. Obviously it is a step towards self-reliance. How does it shape up, how does it come along? It's a long way down in the future, but my sense is, given their capability and execution capacity, the way Reliance have executed previous projects and everything, I have no doubts they will do it quick and thick. So my sense is, yes, I think it's a great thing. Reliance, any which ways, is showing some green shoots of late, given the way oil is spiking up, given the way they're going and tying up in the US to refine the Venezuelan crude, and plus, I think overall they are a beneficiary of this entire geopolitical events which are shaping up. So yeah, I think it's hugely positive for India as a country and for Reliance as a stock.
All right, Mohit Gang, we will leave it at that for this morning. As always, pleasure having you here with us on News9, and thank you so much for your time.